Yes, hi and welcome everyone for the next presentation of this day. My name is Daniel Torsson, analyst at ABG, covering IT and technology companies. And for this presentation, we will have Proact and the CEO Jonas Hasselberg with us. So I leave the word over to you, Jonas. Please present Proact, and I will have a couple of questions in the end.
Will do. Thank you, Daniel, and apologize everyone that I couldn't be there in person. I'm out of town on business, but I'll try to do this as good as possible over video. So we'll talk about, and if you skip a few slides forward here, Daniel, please. We'll talk about our Proact. We'll talk a little bit about our market. We'll talk a little bit about the financials, but I'll start here. For those of you who do not know the company, we are a tech company based out of Stockholm. We've been around it's actually our 30th anniversary this year, so we're quite proud of having been in the tech business for so long. Founded in Stockholm, but I've grown out across the Nordics and into Europe, as you can see on the map here. Sweden still the largest market for us, but we're big in Germany, big in Netherlands, big in the UK, Norway, Finland, Baltics, Czechia, and so on. So quite a good presence in Northern Europe. We deliver IT solutions to a large number of large customers across Europe, turning over just short of 5 billion Swedish. And of course, we're listed here on the Stockholm stock market. And one thing you'll hear me talk about a lot this next couple of minutes is that we not only are with 1,200 people, but one thing that is differentiating us is that we only do the things that we are really good at. So these are really skilled people in our company, and they're definitely experts in their respective fields. And that's an important part of our journey. And we have a good growth journey over the past couple of years. Like I said, we're just about to break through the 5 billion Swedish mark and also been on a decent journey in terms of increasing our profitability, which has doubled over the next couple of the past couple of years. And on the next slide, I'll just dig a little bit deeper into how we are serving Europe. So we are organized or grouped, I should say, into 4 different regions, and you can see them on this map. So Nordic and Baltics is the red part of the map here. It's definitely our largest market in terms of revenue, as you can see, but Germany and Czechia, which is our second largest region, called Central, is eager to catch up, and then followed by West with Netherlands and Belgium, which in turn followed by UK, are all eager to catch up with the Nordic region. So we are quite decentralized, which is important to our culture and our ability to meet customers locally in each of our markets. We understand our local customer needs very well. We can act very quickly on market trends. We know the competition to beat. At the same time, we are centralizing a few important functions, and the most important one is the delivery of our own cloud services. And you can see on the map here, we are centralizing that delivery to 4 different delivery centers. And this gives us decentralized management, decentralized accountability, but with the scalability of centralized delivery of our cloud services. One thing in particular maybe to highlight is that we do deliver these services 24 hours a day, in particular maybe our security services, which is obviously becoming more and more important. So we are manning our security monitoring centers 24 hours per day and can both detect and respond to attacks on our customers or our own data centers for that matter within seconds. So that's a little bit how we're structured across Europe. I'll speak a little bit about the market on the next slide, where the question around what do we actually do, which is a very good question. I'll try to give a couple of examples here in terms of what is, when we speak about technology and IT and us being an IT company, what does that mean? Well, we try to help large and medium-sized customers with what we call the infrastructure that power the customer's mission-critical use cases. And I'll give a couple of examples here on this slide. On the top left, we're recently helping a large customer in the healthcare. It's a hospital in the healthcare industry with digitizing their patient records. It's a regulatory requirement in the UK, so they have to do it, but it's also, of course, geared to real business benefits in terms of freeing up time from the doctors and the nurses and the clinical staff to spend time with the patients, not time in administration. So that's one very important business benefit. But the other one is obviously privacy. We talk about millions of patient records that have to be stored and managed in a very, very professional and safe way. So we are helping this customer with what for them is definitely a mission or maybe even a life-critical use case of helping their patients while maintaining then a low amount of administrative task and a very high degree of privacy. So just one example is where we deliver the underlying servers and application structures for them to be able to do that. There's another example here, which we call a software as a service scenario. This is a Swedish customer. They deliver a service to their hundreds of thousands of small companies across Sweden to do their financial reporting and accounting. So it's effectively an application they do over the cloud to manage their financial reporting. Obviously, their customer, for them, it's critical that all the data is maintained. This is the core of their business, all their financial data, all their customer data, all their invoicing, all their bookkeeping. So they really need to make sure that this data is kept in a robust and reliable way. We've been helping them with designing the technical architecture for their application. We've helped them design redundant data centers so they have geographically distributed servers and networking and applications. So if there's any incident in one end of the country, they can move their traffic over to another geographical part of the country. They, of course, want to have their technical staff to focus on application development and evolving the benefits to their customer. So they're outsourcing the management of this infrastructure to us. So we deliver this as a service, as a cloud service, so doing backup, disaster recovery on behalf of the customer. And obviously our consultants have been in there and our support engineers to make sure that this whole infrastructure is up and running. So that's just a couple of examples of how we help customers translate business critical needs and use cases into infrastructure, server, storage, networking, the management of all of this to something that's robust, reliable, and secure. We have a very complete portfolio of products and services, and we can deliver this to our customers either in a resale business, so they buy equipment from us and manage it themselves, or, which of course is more and more common, they buy it as a service from us. So we deliver it through our own portfolio of cloud services. And we'll break that down a little bit on the next coming of slides. So if we move to the next. You can see here we have 4 categories of products and services. Still what we in our terminology call systems. So this is a reselling of hardware and software, again, very customized for our customers. So this could again be AI servers for artificial intelligence use cases, could be large storage servers for huge amounts of data, could be networking equipment to connect multiple sites, or all of the above in a more complex combination. We sell support, so this is technical expertise to our customers to make sure that those systems are up and running 24/7 a day, that everything is working the way they expect, the lights are green on all the servers. The third category, and the most important one, is that all our customers obviously moving to a world where they don't have the skills or do not want to have the skills or manage all this themselves. They want to buy it as a service. So same technical functionality, but they buy it on a subscription basis from Proact instead. So we have a broad range of what we call managed cloud services. Again, same range of things, storing data, transporting data through networking, securing the data, analyzing the data, running application that consumes the data. So a wide range of software as a, or technology as a service, I should say. And then last, and frankly also least in terms of revenue, but very, very important, a range of consulting services to help our customers, anything from designing their architecture. So how do we design the technologies, a technology architecture that can really cope with the strategy we're trying to do, solve our business problems, pursue those business opportunities. We help them transform their applications and their data. We migrate them into modern technology architectures, we train them, we operate their equipment. So a quite broad range of consulting services. And then I just highlight a few things in terms of areas of expertise. It's non-exhaustive, but maybe just reflecting some of the key trends in the marketplace. Cybersecurity, of course, super important, ever-increasing amount of attacks. Not only about preventing attacks, but frankly, most of our customers are realizing there's no guarantee that you are not attacked. So you also need then help to be able to restore your environment. So we're helping customers both with preventive services, but equally so with services to restore their environments in case there is actually an attack. Number 2 here, application development to speed up time to market of applications. AI, of course, super important, very hyped. And then Microsoft as a very important technology provider across any industry. So if we move on, we live in a market that is growing quite rapidly. It's driven by a couple of different things. Again, the business needs of our customers, the underlying driver, this need to use technology to evolve their business, or digital transformation, as we would call it. So that's number 1. Number 2, again, the threat of cyber attacks. Good trend around sustainability. A lot of our customers come in and say, hey, we're using a lot of IT equipment. It's consuming huge amounts of electricity. Can you help us become more sustainable? And yes, we can. So this is an area where we're seeing a significant increase in expectation and demand from customers, which I think is positive. And then more to the right, more maybe technology trends like using modern cloud technology to get the flexibility, the speed, the programmability of the technology, and the ever-increasing demand for data. So overall, good growth drivers in our marketplace that gives us an opportunity to continue our own growth journey. On the next slide, we will just briefly look at our strategy. I won't spend too much time on it, but it's obviously very important that we continue to move our brand towards being this cloud service provider, having a relevant portfolio of products and services. This is a continuous innovation wheel for us. A lot of work around now on cloud, but also AI, cybersecurity, that's just a couple of examples. Scalability, super important for us, standardizing and streamlining the delivery of our services. And nothing of this above here, none of these 3 things can be done without the right people. It's a very people-centric type of business. So obviously we spend a lot of time to attract and develop the right people. The competition is tough. It's hard to find good people, so we need to be very good. And then last but not least, all of this we try to accelerate through an active M&A agenda. And we think these together will support our strategic financial goals of more than 10% revenue growth, reaching an EBITDA profitability of 8%, and obviously shifting our whole business model to becoming a services company. Next slide, please. We'll just look a little bit on history. We've done this for quite some time, like I said, 30 years, and overall I think we are on a good growth journey. We've grown just below 10% over the past couple of years, which has been, of course, through the years of economic downturn and pandemics and all sorts of challenges. But as we look forward, we see no reason we shouldn't be able to continue to grow at the pace we've said, meaning 10% or more, both organically, but added or topped up, I should say, with acquisitions. So when we speak about this growth rate, it's a combination of our organic growth and the M&A growth. Next slide. We do not speak enough about data. Hopefully we will become a little bit better over the last couple of months. Some of our business is under contract. Of course, the cloud services I mentioned, customers sign up for contracts. We deliver them over multiple years. We invoice them on a monthly basis. Same also with our support contracts. So we combine them into something we call recurring revenue. And the good thing with recurring revenue is more predictable. These are contracts customers pay on a monthly basis. It's not so volatile. It's also a higher gross margin for us because we add more value to our customers. We've had a good growth rate over the past several years in terms of our annualized recurring revenue. So we're now almost a third of our total revenue is revenue under contract. And as we continue move our mix towards services, we'll see these numbers increase. And we'll also see a little bit of that volatility that we have seen traditionally in the reselling, the systems business, to have less of an impact, which will be good for, I think, for everyone. So good growth here and a good continued trajectory as we shift our revenue. And if we continue, we will see that we just announced a few weeks ago our Q1 results for 2024. Great growth in profitability. We increased by more than 66% in terms of profitability. A number of different things that were underpinning this growth. Definitely improvements in our services business, which is strategically important to us. So the scalability of delivery. We also had a couple of systems deals with higher than normal gross margins. That was more of, let's say, one-off positive contributions. But underlying, we're going in the right direction here. We have been, some of you know already, if you back up a little bit, Daniel, we have been entering onto a buyback of our shares program, a share buyback program, which has also been successful. We have a very strong balance sheet, so we felt it was prudent to give a little bit back through a share buyback program. So that's been positive. Recurring revenues I mentioned, and then we've done a lot of things in terms of our portfolio. You can also see here on the bottom of this slide, good cash flow generation in the quarter, and maybe more importantly, good intake of new cloud contracts. So we report something we call total contract value, or TCV, which is the value of new contracts that we've signed in the quarter. So this is new revenue coming into our books as we onboard these customers. So a good quarter overall. Growth in services, great improvement in profitability, great intake of new contracts, and very strong cash flow. And then I'll just show the next slide in terms of our balance sheet, a bit of a complicated slide, but we went into the quarter. So we left last year, 2023, went into 2024 with about 80 million in cash. And then we had, as I mentioned already, very strong cash flow from our operations, quite little investments. We did the share buyback program, amortized a little bit on the leasing, and we're now with a stronger cash positive situation than in a long time. So that means we are well positioned for continued, of course, our dividend. We always do dividends. We can continue our M&A story, and of course, continue then if there's still money left here with our share buyback program over the next couple of months or quarters or years, which is great. So strong balance sheet. Quickly then, we communicated a few years back our financial targets. We touched on it already. We want to grow by at least 10% per year. You can see we're trending just shortly below that when we look at the last 12 months. We are targeting the EBITDA percentage of 8%. Good improvements over the years, but still a little bit way to go. The main drivers here we've touched on already. It's the shifting of our revenue mix to cloud services and the scalability of those cloud services. And like I said already, we see positive trends here in the quarter of this happening in reality. Third one here is if we don't want to overburden our balance sheet, we want to have a manageable debt, and we should never be above 2 times our EBITDA. Obviously, we're well below this because we're cash positive, so this is currently way below our target. Return of capital should be 20%, a little bit below, but also because we do M&A, so it has a bit of a counter effect here. And then last but not least, we should have a strong dividend story, and we try to increase that in terms of krona per share year by year. And this year, we just paid out 2 krona per share, up from 1.85 last year. So okay traction, but very positive outlook for the future across the board here. Then if we just summarize, and I'll open up for your questions here in a second, Daniel. I think very good start of the year. Of course, a good first quarter. We talked about it already. We like the trend we're seeing in our recurring revenues. It will drive that improvement in our gross margins. It will drive the predictability and stability in our business. It will drive more value add to our customers and loyalty. So very positive trends. Then in general, we see the market is improving after a couple of years of hesitation and uncertainty. I think we see improvements across all 4 regions, slightly different pacing. I think Nordic and Baltics has been strong for some time. We saw good progress this last quarter in West and the UK, and we're starting to see good light in the tunnel in Central, with Germany, of course, having been maybe hit hardest here in Europe on a macro level over the past few years. So, but good improvements in the market across the board, driven not only by partly some of these key core trends like AI and cybersecurity. So that was just a quick summary of Proact. Daniel, I'll hand over to you for questions.
Yeah. Excellent. Thank you very much, Jonas. I start off with a question on cybersecurity. What type of demand do you see the most right now, and what is the scarce resource out there to help enterprises and public sector? Is it people and consultants, or is it product and solutions which are not good enough for?
No. The scarce and difficult thing here for anyone, in particular than customers who are not necessarily in the tech business at their core, is the skills of being able to manage all the different angles of cybersecurity. There are so many different things to think about here. You know, not just you have to do vulnerability assessments, you have to protect your perimeters, you need to be able to manage and restore, you need to have policies, training. There's so many different angles on how you manage your security. So the biggest challenge for customers is skills and resources to do this, and being able to do 24/7 every day of the week. So that would be the biggest challenge for any customer out there.
Yeah. And do you see any scarce resources in your deliverability in terms of third-party products or internal consultants? Could you deliver more if you had more resources, for example, or how do you see it?
No, I don't think that is our biggest challenge. Quite the opposite. We're doing really good here. I think the biggest trend shift, and I touched on that a little bit already during the presentation, is that 2 years ago, perhaps the only thing people asked for is, I need to protect my perimeters. I don't want people to get into my environments. I don't want ransomware on my data or in my data. I think now we're seeing a more nuanced style with our customers. They realize there is no 100% guarantee. You can do a lot of things to protect yourself, and you can definitely minimize the probability. But you also need to make sure that if, in the worst case, you are attacked, that you can restore your data and your environment. So the things that we have been doing for 30 years, data backups, secure storage solution, disaster recovery services, is one of the most sought after and demanded type of solutions currently, and one of the things we obviously do really well. So I think the complementary parts of our business now, the preventative services with vulnerability assessments, monitoring, response services, combined with the backup and the restore services, is a very good combination for us when we speak to customers.
I see. A question on cloud order intake then. It was strong here in Q1. Is that by any means driven by AI-related demand because you want to use Copilot in enterprises, or is it just the normal cloud migration we're seeing here and we should expect the AI features coming later on?
Yeah, no, not a lot driven by AI, but definitely a lot of these mission critical use cases we spoke about here. So we do see, I think we've had 2 really good quarters now with order intake, and there are definitely a lot of these broad customer use cases that I mentioned a few of. On AI, obviously a lot of customers are still in the, I don't know what to call it, the experimentation mode, the finding their way mode. Obviously, a lot of people may be experimenting with Copilot, which is built into Microsoft 365. But those real, let's say, company-specific or business-specific use cases are still not crystallizing at the level yet that we would expect. We do know a lot of our customers are experimenting. We were quite early, to be frank. I think we did our first AI implementation back in 2018. A lot of universities, healthcare, public sectors were quite early with both research on AI, but actual use cases as well. I believe what we're going to see is that a lot of the piloting and experimentation happens in what we call the public cloud, so on the Microsoft Azure cloud or on the Google cloud or on the Amazon cloud. But as they start to crystallize their actual use cases and the business cases are becoming more clear, they actually find their algorithms. They see how they can use AI for their own business benefits. They're probably going to pull some of that production back out of the cloud and back home, so to speak, if nothing else, because it's very critical data and you need to run it in a very cost-efficient way. We've seen some early signs of that happening, but it's still early days.
Excellent. A final question from me is on M&A. I mean, now you have started the buyback program. You have a net cash position, as you showed. Should we interpret that as you see a lack of M&A targets, or do you think that you could do both? And what are you looking for in terms of acquisitions?
No, we'll do both. And I think in order of priority, we will do dividend, of course. We will do M&A, and then we'll do share back in that order of priority. 2023 was slow. I think two things happened in 23 that are kind of good to bear in mind. One was that it was just in general a slower market in terms of transactions and M&A and companies being available. But maybe in our case, more importantly, a lot of our targets or potential engagements we were having, they had quite high expectations on their valuations, while at the same time the market was under pressure and their profitability was under pressure. So we saw a bit of a divergence between the sellers' expectations in terms of valuation and our ability to motivate that with their profitability trend. This year started quite differently, much more active, both in terms of the amount of companies that we are reviewing, amount of active structured sales process that we're being pitched and asked to join, companies we've engaged with and are coming back out of the more difficult times of 2023. So I think it's a much more positive marketplace right now.
Excellent. That was my final question, Jonas, and thank you very much for presenting. And
thank you.
See you next time.
Thank you very much, and take care. Will do. Take care.
Bye.